2 days after terrorists killed at least 26 civilians in Pahalgam, a senior HDFC executive sent a cryptic message to a colleague. They may come for us now, the message read. And by they, he meant the regulators. What followed was not just a normal routine check. It was a full blown financial inspection from the top echelons of the government: Home Affairs, Finance, and Corporate Affairs. Add to that the Reserve Bank of India, or RBI. Why? Because in the digital world, terror is often hidden in plain sight. Sometimes it's just a payment to a merchant that nobody really looked into. So they started looking with a magnifying glass. In a matter of days, panic gripped the payments industry. Fintech firms scrambled, big banks started holding internal audits at breakneck speed. Meanwhile, a quiet group of usually ignored tech companies that help banks vet online merchants suddenly found themselves at the center of the national crackdown. And the government's message was clear: go after shady digital payments, gambling, betting, even drug deals. And the idea was simple: follow the money because sometimes it ends up in the hands of terrorists. For example, if a meth deal was taking place through UPI, somebody had to be held accountable. But that somebody is probably not going to be the meth dealer themselves. You see, when you make a payment online, say to a site that sells cheap Chinese electronics, the money passes through what's called a payment aggregator. These are companies like Razorpay, PayU, or Paytm, and they rely on acquiring banks to approve merchants. But when things go wrong and it is discovered that this online site was actually a front for some illegal operation, the regulator is not going to call the folks running the website in question. They will call the bank. And lately, the RBI has been calling a lot. Multiple senior banking insiders told my colleague Ronak Kumar Gunjan that the scrutiny has reached unprecedented levels. One risk officer from HDFC said that I have never seen anything like this before. Two others from ICICI and SBI backed him up. Now, to be fair, this is not coming out of nowhere. Just last year, the RBI had put major aggregators in the penalty box, banning them from onboarding new merchants because they were not checking hard enough. One aggregator even admitted that there was gambling, betting, and even money laundering happening through their systems. And now, after the fair play betting scandal exploded in April, where 4,000 crore rupees was siphoned out of the country through fake firms and shady payment routes, and then the Pahalgam attack, regulators are not just reacting, they are in full offensive mode. And what is happening as a result is a massive spike in demand for companies that review and scan merchant websites. Ones like Authbridge, BankIQ, and Chargeback Zero. Before all of this happened, these firms used to check around 1 lakh merchant websites a month. That number has doubled within 2 weeks of the Pahalgam attack. One such company's CEO put it quite simply: volumes have gone up 4 to 5 times. But here's the twist: the merchants who are the ones actually selling something, legit or not, are now in the crosshairs. Because this is not just a tech story or a payment story. It is about how national security is reshaping digital commerce in India. And this is just the beginning. So, to understand how all of this is playing out, I spoke to my colleague Ronak. Welcome to Daybreak, a business podcast from the Ken. I'm your host Snigdha Sharma, and I don't chase the news cycle. Instead, every day of the week, my colleague Rahel Philippos and I will come to you with one business story that is worth understanding and worth your time. Today is Friday, the 16th of May. Ronak, these third-party service providers like Authbridge and BankIQ and Chargeback Zero that you mentioned in your story that are vetting merchants for these banks. They told you how they used to review approximately 1 lakh merchant websites each month, but now, because of what is happening, acquiring banks are pushing them to vet more than 2 lakh. And this is just in the last 2 or 3 weeks, right? Can you explain to us, to start with, what exactly is the job of these service providers? Like, how do they exactly vet these merchants?
So these service providers are called onboarding and monitoring technology service providers because during the time of merchant onboarding, they help acquiring banks or fintechs or any kind of a lender to make sure that the documents of these merchants are in place, the KYC is done properly, the identities etc. are matched, and then there are a host of other responsibilities that they take up. For instance, they make sure that the merchant is not exposed to any politically exposed person because that can be used for sort of different influencing mechanisms, etc. So during onboarding, they come very handy. And then the second stage is monitoring. So, for instance, a merchant has provided XYZ documents at the time of onboarding. The TSP now has to make sure that during monitoring, those documents are still in place, are still matching with the originally provided documents. And then they also need to make sure that there are no, say, broken pages, no broken contact us pages, or their other important pages are in order, just to make sure that this merchant is not fake or did not fake the documents during the onboarding process, to make sure that they get through. So basically, onboarding and maintenance slash monitoring is their job.
Right. And what are the filters, Ronak, that they use that have become so much more stricter now?
So in the past 15 days or 20 days, some of the filters that have been made tighter or newer filters that have been included include open source intel. It basically means that not just merchant websites, but social media pages like Facebook, Instagram, LinkedIn, all of that is also being tracked now, and tracked very closely, by the way. For instance, the timings of the post, or the tone of the comments, or in case there is a sudden shift in content strategy, all of these things are being tracked very closely. And even if there is a slight change in any of these, then they're being flagged by these technology service providers. In the past couple of weeks, some of the service providers have also repurposed their automated web scrapers and bots to ensure that there is more stringent scrutiny. Some of the new red flags now include even minor shifts in a merchant's business. So previously, only a full pivot. For instance, if an e-commerce site suddenly selling software would have been flagged, but now even say a garment store, which is now completely pivoted suddenly in the past 2 3 days into, say, selling shoes, even that would be flagged by the TSP initially, and then there would be further scrutiny, further investigation on that. Apart from that, there are also Google reviews and reviews on other platforms. Say there is a sudden drop in Google reviews in the number of people who are commenting on or in the number of people who are giving testimonials, etc. Then that would be flagged as well, because it is supposed to be believed that there needs to be, say, a staggered drop or a rise in Google reviews, or any other review for that matter. Sudden fall and rise in that will also be flagged. Or say the comments are being made, the reviews are being made by bots with weird names, say Blip Blop, etc. That would also be flagged.
Right. Okay. So, next, can you tell us a little bit about the different categories of suspicious merchants that these service providers are looking at?
So there are two, three different types of suspicious merchants. One of them easily are the fly-by-night operators who come in with the intention of fraud. They invest heavily in advertisement, and they have a good-looking website. The prices of those products, usually electronic products, are at an unbelievable price. For instance, they will be selling a phone for say $10,000, which is available for 15,000, 16,000 outside. Heavy discounting, heavy investment in advertisements, etc. So in a very short time, they will be reaching out to a lot of people, and then before the monitoring is done by the TSP, after post onboarding and before the monitoring is done, they would sell their products and completely get out of the system by providing nothing to the users. They would collect all of that money and disappear. So that's one. Second, there is another form of suspicious merchants who deal with things like, say, betting or online gambling, fantasy sports, etc. They usually are able to draw a lot of money very quickly because people, move into these traps with the lure of earning more, and then they keep sinking deeper. So merchants of this sort actually make a lot of money and then disappear from the system. There is a third category, which is suspicious category, but which does not come in with the intent of fraud. These merchants basically have very, very bad, say, delivery or logistics, and they do not have great products, and the quality of their product is always, not up to the standards. So when people order, usually they're not very satisfied with the quality of the product, and there is a lot of chargeback that happens. But because they run on very thin margins, these people usually end up abandoning the entire chargeback or the refund and all of those things, and then are forced to move out of the business. So they don't come in with the intent of fraud, but because their product quality is low and there is a huge chargeback, they are forced to abandon the business and sort of run away, and they also end up in customers losing a lot of money.
Right. So, who are the ones who are, kind of getting caught in the crossfire?
Merchants which are being caught in the crossfire and are sort of resulting in collateral damage are the ones who do not have the intent of fraud, but because things are being scrutinized so closely at this moment, it's very difficult for them to continue, because even a slight shift in content strategy or a slight shift in product strategy, etc., is being monitored very closely. So for instance, say a merchant started off business with a number of Chinese products which do not have great quality, and after selling most of those products they realize that there is a huge chargeback that happens. They would want to shift to some other quality of product or some other category of product in order to continue business, but because the chargeback slash refund is so high, it sort of triggers the alarms for technology service providers, because the bots and the web scrapers, etc., are of the opinion that if a company is, the percentage of chargeback for that company is very high, the chances of them frauding the entire system also becomes high. So while they may not actually come in with the intent of fraud, because the web scrapers are very, very stringent at the moment, they result in flagging these merchants, sometimes blacklisting them, and also sometimes, sort of deboarding them from the entire system.
That is all for today. I hope you liked this episode. Please do be careful when you buy stuff online. Always good to double check, especially if it is a brand that you've not heard about. Go to their social media accounts, read the comments, and if you have any thoughts or questions about this episode, send them to us as texts or voice notes on Daybreak's WhatsApp number at 89711 08379. I'll repeat that again, 89711 08379. Have a great weekend and catch you again on Monday.
Daybreak is produced from the newsroom of the Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. To subscribe, head to theken.com and click on the red subscribe button on top of the Ken website. Today's episode was hosted by Snigdha Sharma and edited by Rajiv CN.